Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in, take a look, see what's going on today. If you want to follow me, it's at _finance. And if you want to join our community, finding-value.com, where I dive deeper into all these topics, sectors, looking for investment opportunities and sharing those opportunities with everyone in the community. I do that through midweek updates where I share my opinions on individual sectors and companies and what I'm doing with those sectors and companies. You can see my purchase history. You can see me build a portfolio in front of you guys, which is one of the portfolios that I have, Roth 401k. And I also interact with members during each weekend during Q&A sessions. If that interests you, special is a coupon code that you can use to sign up for a 50% discount on the first month only on the monthly membership and a $100 discount on the yearly membership. Come down. Patrick says, silver, no need to be greedy, no need to try and catch a bottom. If you want a $100 price, what you need to do, or what you do need, is patience. I don't know what that means. No need to be greedy, no need to try to catch a bottom. Um, when I read some of the people's opinions, it seems like, oh, don't worry, don't be greedy. We've got time. We don't have, you can wait. I don't know, guys. That's not the way that I approached the market. I was buying like a rabid animal, like in the 20s, the low 20s and the $18, $19. Heck, I was buying it at $14, $15, $16 nonstop. I haven't really purchased much up here at all in the 40s. So was there a form of, or did I feel like I needed to get on it in the 20s? I did. I felt like that the clock was ticking. And even though it lasted a few years of purchasing at that price, 2018, 19, 20, 21 were the years that I really accumulated a lot. I felt like the time was ticking. And, was I being greedy? I have no idea. I mean, no need to be greedy. I wasn't greedy then, but I felt like the clock was ticking, that I needed to get into it before the move occurred. So when does someone get into it before the move occurs? I mean, there's got to be a point where you feel like it's time, like the window is shutting. And we'll pull up a chart here. We'll do XAG, USD. I'll show you, like whenever you squeeze up into these corners here. So 2018, this is when I started to accumulate a whole bunch all through here. Like I felt like this window was going to close. The pattern was the falling wedge and then the double bottom. Let me draw a better line through here. So that double bottom there, right? And then you get a squeeze on top of it. So in this area, I felt like I had to get on it. I mean, I was getting everything I could. I was running out of cash. I was deploying like an animal down there. I was searching. I was buying from private individuals at spot price or even below spot price in that circle. The game was on. Was that me being greedy? Oh, no need to be greedy down here. Well, the window of opportunity was there. I jumped it. Then we broke out. Then we did a retest. I was on it, dude. Buy, buy, buy all through this zone. Get in, get in, get in, get in. Bam. Now, I mean, I kind of feel like the move is in progress here, guys. I mean, I did what I could where I could, and I threw the cash I had at it when I did. And I did the same thing with platinum. You get in these corners here. You buy I bought this whole thing. I bought all through here, bought a little bit in here, bought a whole bunch all through here. That whole thing. Was that a lot of people say, oh, we haven't broken out yet. No need to get on it. What do you mean? I was getting on it because we were below the cost curve. That was the lowest risk opportunity in the market given the upside potential. It was probably the best risk reward things that I could find. Silver in 2018 and platinum in 2020, 21, 22, 23 at that $1,000 an ounce or below with premium. So I don't know. I read some of this stuff and, I like Patrick. I'm not saying what he's saying is wrong, but at some point you got to get in. It's like, I mean, I didn't wait. I fired. Now, people are going to tell me, well, it went sideways for a while. Yeah, but that's where you get the opportunity. So it's not an opportunity lost if you acquired at $800 platinum and it's sitting at 1,549 in a little bit of a pullback, which will probably easily go to four, five, six, $7,000 an ounce. And you just have to realize that things, if you're buying at bottoms, may chop sideways for a little bit. I mean, everything looks so obvious looking backwards, and everything looks so uncertain as you're going through it. And that's where you have to ante up the nutsack to just say, you know what, it's cheap. I'm going to go in here and I'm going to be patient for it to play out. And every single sector is like that. The pattern looked fantastic here for an entire accumulation. Now, here's another one. Starting to see some outperformance now from XLE, not good for the SPX. So that's XLE divided by SPX, potentially breaking out here, and the S&P looking kind of weak here. So XLE looking strong, S&P looking a little bit on the weaker side. I kind of just threw XOP in there. What I see is a falling wedge and your double bottom, and we're at that bottom here. When I was accumulating silver in 2018, that this is the same setup. Here, let's go back real quick. I'll show you what it looks like. You guys see that falling wedge, and then this is the double bottom here. And then XOP versus SPX is like somewhere in this region down here. So we're in the circle. That's where I felt the urgency to get in. Now, what happens is everyone is so short-sighted. They are so week to week, day to day, week to week, month to month, that they miss the whole big picture. And all the big money is when you buy a whole bunch here and then you just play the big picture. That's where all the big money's made. And you have to sit and do nothing and be patient. So when I look at, say, XOP versus SPX, we are in that buy area. And it could be there for a little bit. We could be chopping sideways for a little while. And I'm not saying that I know that this is going to be 100%, breakout in some time frame. But this is it. This is where you start to accumulate shares. Now, I've already done that. Why? Because the individual companies have already bottomed. They've already bottomed there. So this ratio will get you in the ballpark, and then you have to dive into the individual companies and start looking at those companies. Now, they're still good entries. I'm not saying they're bad, but a lot of them have already bottomed and they're up, 100% or more off their bottoms. 75%, 200%, 100%, depends what you're looking at in the companies. But I feel a sense of urgency when you get down and it's cheap. You have to grab it when everyone else just doesn't care. When it goes up, your risk reward changes. It's not as good if we go up a lot. So, in my opinion, the risk reward here is far less in that circle than it is up here. And then that is way different than it is up here. And up here, you've basically run the entire bull market. So however this looks, whatever pattern this puts in, people will say, "Oh, you got plenty of time." I don't think so. If you're going to get in, you want to get in as early as you can. And if you're looking at some of these individual companies, they've bottomed. The bottom is behind us now. And they're still in a bottoming pattern. They're scribing out the right hand shoulder on some of them. And there are some smaller companies that are at this exact location. They're right there at the double bottom, which are still good entries, really good entries. Ranking U.S. consumer sentiment falls to its second lowest level on record. Consumer sentiment is now below the 2008 level. Now, this is where I flip it. All right. So if we bought stock, this would have been a great time to buy equities in 1980 and 82. This was the best time in human history to buy equities that are alive. People that are alive today. 1980 to 82 was the bottom of the equities market, and it was also the bottom of equities to commodities. And that was the best time to buy equities. Today, even though we are low, this is a really good time. This was a really good time here. 2008, 9, that's a bottom. So bottom, 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 bottom. Well, yeah, 2022, and then we have another bottom here. This is a good time to accumulate. You want to accumulate when sentiment is poor. You want to sell when sentiment is good, for the most part. Based on the IEA net zero forecast from 2020, oil demand should be 79 million barrels per day right now. Think about that for a second. Remember all those forecasts that people forget about? The IEA net zero forecast from 2020 said that 2025, our demand would be 79 million barrels per day now. And what is it? Oh, we're at all-time highs. We're at like what, 107, 108, something like that? How wrong are these projections? Now, a lot of people make decisions based off these projections. And here I was buying the living crap out of oil in 2020. Still holding, by the way, in the majority of those companies. How wrong are these forecasts? How wrong has the herd been? Misguiding everyone. How wrong are their opinions? What has been the most reliable thing? How cheap these sectors get and buying it when it's super cheap. Oil is the most hated asset in the whole world. Adam Rosenzweig and I talked about why the deep dislike might actually be the most bullish sign of all. I agree with that. I think oil is going to do incredibly well. Incredibly well. And even if the companies, if you're just in the sector, the price of oil is so low against gold and other asset classes that oil is going to do the heavy lifting. The price of oil going up will do the heavy lifting in the profitability of the companies. It doesn't even have to come from the companies itself. Our international oil and gas index is also trading at the highest level since 2014. Looks like we're almost about to break out for the international oil and gas index, and that's Shell, TTE, ENB, BP, CNQ, and all those kind of bigger international companies. That looks fantastic. That doesn't look bad. Even though oil is down, these are ready to break. That disconnect between the equities and the oil price means you're in a bull market. It means you're in a bull market. And that's why if the equities are outperforming the commodity, they know it's coming. People are positioning for it. So this is, they know it's coming. So it's coming. Gold starts the move in commodities, which is ripping. Copper leads oil. Copper's just here about to break out. And then oil moves last. We're still in this downtrend, and it's about to follow copper here. It's coming. That's why the equities are up here. It's coming. The era of tech dominance is ending. The age of real assets is beginning. Commodities will lead for decades. For decades. XME divided by QQQ, and we're basically right there trying to break out. We're right there trying to break out. We're on top of volume, which means you got a lot of downside support. We're ready to rip higher, and that's XME. Let's chart it here. Oh, wow, look at that thing. That's the big full picture. You have a falling wedge. This year was the peak of commodities, 2008. Big pull down in a falling wedge. This is your bottom here. Let me tighten this up here. So we're trying to break out right now, and we're squeezing up into the corner here for XME divided by QQQ. You guys see that? What a great looking chart. So what you get is you give downside momentum. So downside momentum, momentum's worked off going sideways, and then you're going to get this big upside move on the right hand side. This is such a great opportunity for mining companies and oil and energy and precious metals. God, this is such a good opportunity. Let me look at XME without it being a ratio chart. Oh God, look at this. Falling wedge, double bottom, breakout there. Uh, we broke out of this guy here, your retest. These are like retest moves. This could also be wave one, wave two, and then the breakout. And now we rip it, and yeah, we're gonna get a pullback. Whenever you go vertical, I don't chase this stuff, guys. Ooh, wow, this looks good. Uh, you get these pullbacks. Here we are. That's a breakout today. This falling wedge, big bullish engulfing candlestick today. This looks good to go higher right now. This looks very good right now. It's a reversal candlestick at the bottom here. This is when I would buy something. It'd be right in here, right this second. So yeah, XME looks really good. And that's all I've got for today, guys. We're gonna keep it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Specials the coupon code. We do have a Q&A session coming up Saturday. It's at 7 a.m. Mountain Time. You can ask me whatever you like during that Q&A. All right, guys. We'll catch you later. See ya.